Hi, everyone, and welcome to the Amber Data Derivatives podcast. I'm here with Chris Chung, the co founder of Titan, which is a DEX aggregator built on Solana. Chris, how are you?
Doing great, Greg. How are you?
Doing great. I mean, it's nice to meet you. I'm very excited to dig into everything that you're building. But I'd like to maybe just jump into a little bit about your background. You have a really interesting background in the equity space. I think it would be pretty useful for a lot of our listeners who are traders to kind of hear how you got started in finance, how you made your way over to crypto, and then finally how you co-founded Titan.
Yeah, sure thing. So I guess my background lies in more in the U.S. and Canadian equity side of things. So there, I was really building out low latency analytics. So you can imagine like pulling all this data from Bloomberg, S&P, fundamental data, macro data, pricing data, corporate actions, and making thousands of valuation models for a single equity over 20 years of data. So you can imagine 20 years of daily valuations, 5,000 valuations every single day for those 20 years, and just spitting them out in under a second for each stock. So if you can horizontally scale it, you can hit off the entire US equity market, survivorship bias adjusted. So that's what I was really up to back in the day as a background.
Yeah, that's really interesting. So when we're talking about sort of those low latency models, are we looking at like top of book, level two, order book updates? Are we trying to figure out like spot and queue, stuff like that?
So on the stuff I was primarily focused on, it was just trying to make valuation models. So you could think of your classic DCFs, DDMs, stuff like that. Take it out of Excel, put in a systematic model, and just run thousands of these and see which ones hold up the best under what market conditions currently exist. So that's what I was more looking at. I have looked at pricing data like you were talking about before, but main focus was on the fundamental side of things.
So that's really interesting. So is a low latency approach to the fundamental model. So is the idea something like I have this DCF with all these assumptions, earnings comes out, let's just say it's outside of guidance to the downside or whatever to the upside, and now you're seeing how quickly the like that adjusts to the new value of the model, or is that kind of the idea?
Exactly. As well as finding out what valuation model is holding up under what regime, right? So some models may fall out of favor, some models may fall in favor on that side. So it's expanding the universe, and this really helped the fund I was at because there wasn't that many people on there, so it really helped the fund manager really expand his universe of stocks, and then also like he eventually broached out to European equities as well because it was a fully systematic model, just like data and scaling up servers.
Yeah, that's really interesting. That makes me think because often we hear a conversation topic of value versus growth, and I think both have their places in different market environments. But from what I'm hearing you say, it sounds like different models might also have their own sort of seasonality to different market environments. Like, would a DCF work better in a bull market or bear market? Is that kind of like the type of idea?
Yeah, that's a type of idea. You can also look at momentum factors that may exist.
Hmm.
So a lot of it is also factor investing as well. So if something is like really high growth or like lots of momentum on the pricing side or lots of volatility, you might place a higher weight on those in certain market conditions.
Yeah, very interesting. And then when you're analyzing markets like this, or when you were doing that in your previous career in TradFi, did you view the market as like different segments of participants, like HFT participants versus investors versus kind of speculators, or did that not really apply?
Um, I think it was more on different segmentation of investors, right? You have your HFT firms, your quant firms that are just running pure mathematical models on that side, and then you have your more classic portfolio managers that are picking what they like based on set number of criteria, whether that's a valuation model, whether what they think on the macro changes on that side. So less quantitative focus, but everybody has to move towards utilizing more data. If you are stuck at just looking at like 20 equities, then I think you don't have an edge and you quickly lose any advantages you may have had, even if you're like the best stock picker out there.
Yeah, yeah, fascinating. So after this TradFi career, you found your way into crypto. So crypto is very interesting. A lot of people have argued there's no fundamental value, there's no intrinsic value. Coming from someone who's worked with a lot of fundamental analysis and different models, did that scare you off from crypto? Did that pique your interest because you thought, hey, these people are wrong? Like, how did you find your way into the crypto side of the world?
Yeah, so I started wanting to work more and more on like, tick level data, and
Mm.
NYSE is expensive if I want to do it myself. So crypto tick level data was completely free. So I started playing around with that and just found it really fascinating. Value is what we subject it to be. Like crypto, to me, you can take a look at it more like FX or a commodity, right? What is really the value of gold? It's just something that we imaginary place onto it because there's very limited actual usage of gold for actual industrial purposes. It's all because like humans think it's shiny and cool and as a store of
Hmm.
value. If we place that same type of logic on cryptocurrencies, it just holds up the exact same manner for me.
Yeah, yeah, I definitely agree. Like, especially with the Bitcoin narrative being sort of digital gold, that makes a lot of sense. And to your point, why does gold have any value? I think in my mental model, it's because it was worth this yesterday plus some variance, and it'll be worth this tomorrow plus some variance. And you can sort of extrapolate that and apply that same model to crypto. So one of the things you mentioned is working with the data space in crypto. Did you start working with on-chain data or trade data from exchanges or a combination of both when you first got started here?
Yeah, when I first got started, DeFi Summer wasn't a thing yet, so there wasn't really much on-chain data. So it was mainly working with the centralized exchange data and their data feeds. Working with basic web sockets or even like normal REST calls on that side. So nothing advanced, like fixed calls or anything like that. So it was very, very interesting, and then eventually got more and more onto the DeFi side of things because I thought that was more interesting than taking a look at just tick level data on the centralized exchanges.
Yeah, that's fascinating. And so a lot of people started in sort of the Ethereum space. Is that where you started, or did you start in the Solana space? Because we'll get to this in a second, but Titan is a DEX aggregator built on Solana. Um, how did you first start navigating the space in general?
Yeah, so first exposure was definitely in the Ethereum space. That's when it was DeFi Summer was just coming out. There are a bunch of projects on the Ethereum space, Uniswap, SushiSwap, and stuff. So was getting more acquainted with those. I only recently got into Solana compared to other people because my co-founder, he actually left the hedge fund I was with to work on the Solana project back in 2021. And then he pulled me on it when we met back up again last year. So that's how I got into Solana.
Oh, that's fantastic. Okay, so you guys started digging into the Solana space in 2021. We had essentially in late 2022 the FTX crisis. Um, did that affect any sort of opinion on Solana for you guys when we had the bankruptcy of FTX? Obviously, prices dropped a lot. FTX had a lot of Solana on its balance sheet. Or were you thinking, this doesn't matter. I'm building in a space. This doesn't change those dynamics.
Yeah, I think, everybody was cautious. Everybody was scared about the price action, but the fundamental tech is completely solid. Like we see it today. There's so much trading volume running through it. It flipped Ethereum on multiple occasions, and I just think it just proves that like if the underlying tech is there and there's enough support from the ecosystem, it's just going to flourish regardless of what exogenous events may happen.
Yeah, that makes a lot of sense. So, for anyone who's new to Titan, can you give us a brief background of Titan and the value proposition and what you guys do over there?
Yeah, sure thing. So Titan is a Solana DEX aggregator. So what a DEX aggregator is that we search through all the on-chain liquidity that may exist on every DEX inside the ecosystem. So when you trade, let's say, for example, USDC to Sol, we find the best liquidity throughout the entire ecosystem. We route the liquidity for you in ideal percentages, and we find the best route for you to maximize the amount of Sol you'll get from the trade. But Titan is also a meta DEX aggregator. By that, I mean, in addition to our own algorithm, which does perform pretty well, it wins around 80% of the time compared to our competitors. The MetaDex aggregator also aggregates other aggregators. So, like ourselves, Jupiter, DFlow, with Express Relay, and it just routes the user to the best price with no fees attached. So, we're agnostic at who is providing the route. We just want to provide the user the best price there.
Oh, that's fantastic. So, if I made the analogy to the TradFi space, it's almost like doing like routing a smart order as opposed to routing to a specific exchange when I'm buying some options or buying some stocks. Is that a way to think of a DEX aggregator?
Exactly. Well, I'd say the meta DEX aggregator portion is more like your brokerage, and each
Mm.
individual DEX aggregator is like your exchange level. So when I place the order on the meta DEX aggregator level, then I could find the ideal route between different, exchanges.
Oh, that's fantastic. Now, something else you mentioned is that Titan does not charge a swap fee. How is that possible? How can Titan make money or keep operations going without charging a fee?
Yeah, for traditional equities, right? Robinhood and all the other American brokerages, they don't charge fees anymore. They rely on a payment for order flow method. In crypto, I think we're still a bit new to be charging for payment for order flow, but other methods we could charge for, so like specialized order types like limit orders, DCA orders on chain that we could start charging a certain amount for. So it's been shown with some other products that they can do it. I know some other algorithms do charge on positive slippage, but for our objective, we're targeting these specialized order types first.
Oh, that's fantastic. So basically, you guys, the play in the way that I'm hearing it is you guys are purely offering a positive expected value service to users, and the idea is you're going to acquire a lot of users, and then maybe at some point in the future, if we get some sort of payment for order flow in the space, then you guys would have essentially a pretty valuable user pool. Is that a way to think about it, or not
Yeah.
necessarily?
Yeah, I think that's the best way to think about it. Like what we really want to do is grow the ecosystem. And the reason why we're all in crypto is for me not to pay like fees, like 10 basis points to do a $10,000 swap. I might as well just trade through my Canadian brokerage account instead. So
Yeah. Oh, that's fantastic. So one of the things I've always wondered about, especially with DEX aggregators, is, I mean, I'm sure there's dev work involved to incorporate DEXs that you would route orders to. What's the process of adding a new DEX that's, eligible for order routing to? And how do you guys decide which DEXs to integrate or not integrate?
yeah, okay. So yeah, the DEX integration portion takes around us 4 days to do all the testing and making sure that everything works on that side. But the critical thing here is that we are evaluating if the quotes are tight from the DEX. If they aren't, then we go back and ask them to update it. We're just doing all the double checks to make sure the speed is correct, the speed is fast enough to keep up with the entire ecosystem, and we just plug it into the algorithm at the end and let's let it run because getting more and more liquidity is extremely important.
Yeah, that makes a lot of sense. And so I'm guessing that a lot of the DEXs that you route to have kind of two models. One is maybe more the central limit order book model, and the other one is maybe more of the Uniswap, Sushi Swap pool model. Is that the case? Like, do you guys integrate both types?
Yeah, so there's actually more types on Solana now on that side beyond I would calling them passive liquid, like Uni V2, Uni V3 type of pools,
Hmm.
as well as like central limit order book. So it seems like on my perspective, clubs have pretty much fallen out of favor because of the gas fees involved, right? But there seems to be a proliferation of like professional market makers actually coming on chain and quoting like they're an AMM. We do support RFQ as well, but these like so-called prop AMMs are offering very tight spreads and taking a majority of the volume on Solana today. So
Oh, interesting. Yeah. And does Titan currently also do aggregation for some of the derivatives products, such as perps or anything like that? Or is that something outside of the scope or maybe on a future roadmap?
yeah, something out of the scope right now. I think our focus is just on the pure swap market, spot swap markets on that side. If a perpetuals platform, let's say Drift or Zeta, I guess they're called Bullet now, wants to use us to facilitate any spot transactions, we'd be more than happy to integrate our side. But on our focus, we just want to provide the best spot swap transactions possible.
Yeah, yeah, fantastic. And one of the things that we've really seen in the space a lot is like coins with embedded yields to them, things like that. How do you think about this, the potential for yields in sort of the Solana ecosystem? Are there coins like that where there's embedded yield into the coin, things like that?
Yeah, no, there definitely is. From the DEX aggregation perspective, right? It's just a tradable asset on our side. So all we have to do is make sure we price it correctly and the algorithm will route it and we just want to trade. But for a trade for a coin with actual yield embedded, I think that's probably where the future is going to be because if I'm holding USDC, I would probably expect a yield as like if I were holding in a savings account, or even better yet, since we're on DeFi, actually, use it, yeah, have that money invested in a money market type of instrument.
Yeah, that makes a lot of sense. So, kind of jumping into sort of Titan's roadmap and where we stand today, are you guys in beta? Are you guys live? If people want to come explore the website and the app, where would they go? How would they get more information?
Yeah. So currently, we've been in private beta for around 1 month at this point. So you will need the access code. In order to get an access code, you just go sign up on our website at titandex.io, and then you just wait for the email, or you can come across access codes within our Discord. Now, the good thing is that our private beta has seen a lot of traction going forward. Over the past month, we've done like over 100 million with just a
Wow.
couple thousand users. Like the usage has been amazing from our perspective. Like 10% of our users come and trade every single day on our platform, and it's getting around 8 to 10 million daily volume at this point with just that limited subset.
Oh, that's fantastic. And so, just kind of jumping back to the Solana ecosystem. So, there's kind of been this narrative, especially over the past year, that ETH is losing a lot of favor. There's kind of infighting in the foundation. The EIP 1559 ultrasound money narrative kind of got overshadowed by L2 transactions. And on the flip side, Solana has been gaining a lot of traction. We just recently had CME launch Solana futures, and we just had ETFs built on top of those futures. I think there's speculation of a Solana spot ETF coming along pretty soon here. What's kind of your take in sort of the adoption from TradFi of the Solana ecosystem?
Yeah, I think it's undoubtable that institutions want to come onto Solana more than Ethereum. Like Solana is just operating at far lower gas fees and far lower latencies, and that's really what's required to have like a fully functional modern financial system, right? You just can't operate at 12 seconds. That's like forever in a system where people are used to nanoseconds. Like even a millisecond is really long, but Solana has managed to get this on a decentralized path. That's why you're seeing so much volume flowing through, and institutions starting to move money and deploying in the Solana ecosystem rather than Ethereum.
Yeah, yeah, that's fascinating. We also saw a lot of meme coins being built in the Solana space. We have like Pump.Fun, we have the Trump coin, the Melania coin, things like that. What's your take on that side of it?
Yeah, so like the way I view meme coins is like I kind of the way how I view pink slips or like penny stocks in traditional markets. These things are highly volatile, but the good thing for meme coins and Solana is that it's really upgraded the infrastructure. It's forced Solana developers to really think about how they design apps, how what they really need to upgrade to sustain all the all the volume that's flowing through trading through meme coins. And I think honestly, it's at a better place today because like it's shown that it can handle the vast amounts of volume. Like when Trump dropped, there were no issues with the blockchain at all. It was just like when the issues happened when Melania came, and then it was on an app level versus a blockchain level. So the app level had some issues, which have been fixed now. The blockchain itself functioned perfectly. So I think it really gets the rails up so that we have a modern financial system that's ready for the future in a blockchain sense.
Yeah, that's a really interesting perspective. It like really hardened sort of the underlying infrastructure in the railways. Speaking of infrastructure, the U.S. regulatory landscape it looks friendly and friendlier to crypto. What's your take on that? Where do you hope that things go when you're kind of looking at the regulatory landscape?
Yeah, so I think the most important thing is this regulatory clarity, right? Because I think for the longest time, especially US founders were really like hobbled on figuring out what they can do and what they couldn't do because there was just no clarity. It's like, will I be investigated by the SEC tomorrow if I go down this path? Nobody really knew. But if there's clarity on what's allowed, what's not allowed, I think that could really like let loose the floodgates on American innovation, on really developing new, unique financial use cases on Solana specifically. Because the U.S. has most deep capital markets in the world, and that's where most of the innovation in the financial space does come from. So really excited to see what happens as we get more clarity from the Trump administration.
Yeah, yeah, absolutely. That's an exciting time to be in the crypto space for sure. So, for anyone who's listening, we're going to put the links to Titan in the show notes. But before we log off, we do have some fun questions that we usually end our podcasts with. So, the first question, Chris, is if someone had or wanted to have a career like yours, what would some advice or one piece of advice that you would give to them or either your former younger self?
Yeah. So one thing, like beyond knowing technical skills or being interested in finance or any of that, and the most important skill set that you could really develop in business school or anywhere else is sales, right?
Mm,
Because basically everything you do, everything in life is literally sales in the end. If you want to pass an interview, you have to sell yourself. You really want to push like a direction for the company, you have to sell that direction. That's what I think is missing from a lot of like theoretical academic classes or courses these days. It's just that ability to really sell, a product, your own vision, yourself to other people, and really push yourself forward. So I think that's probably the most important skill set that anybody can have going up.
yeah, that's fascinating. Yeah, that's a great point. Um, what do you like to do for work? Excuse me, for fun outside of work?
Yeah, I mean, I enjoy playing squash quite a bit. It was a habit I developed at university on that side. So it's just like this rapid reactions. Just like it's just fun. It's also very very good workout there.
Fantastic. And then the last question here, there's a lot of books in finance, a lot of trading books. Do you have any favorite books in the financial space that you found influential throughout the years?
Yes, so I don't recall the exact name, but George Soros's book, I think it was called Reflexivity of Finance or something like that. That gives a very good understanding of how psychology of markets actually work. It's like this flywheel of this drives this, which drives the initial catalyst, right? And this is true of many other things other than finance. It's true of grabbing users in a startup. It's true of generating. It's true of many many things. So I think it's the most impressive financial book. Although he calls it a philosophy book more than anything.
Yeah, I think it's The Alchemy of Finance. I know what you're talking
Yeah, yeah,
about. That's a very interesting book for sure. Well, Chris, thank you so much for coming on. It was a great honor. I'm very excited to see all the developments at Titan and where you guys bring the space forward to.
yeah. Perfect. Thanks for having me.
Absolutely, absolutely. And to everyone who tuned in, we'll catch you next time.